And let me now connect with Neeraj Moga, Head of Research with Veritas Investment Research. Neeraj, good morning. Thank you for joining us. Neeraj, if I take the clock back, last year in September, you had raised concerns regarding Kingfisher Airlines and you believed that the airlines was heading towards bankruptcy. The recent media reports indicate that the lenders are looking to sell non-core assets. So what is your view on Kingfisher Airlines, and do you think it's a matter of time Kingfisher Airlines will actually shut down?
Well, all the issues that we had raised in our Kingfisher report of September 2011 have actually come to pass in the marketplace. And it's interesting, it's a small airline with a very small market capitalization, and I keep on getting these questions on Kingfisher. I don't believe the company can survive. I think ultimately it will be shut down, and I think lenders are already signaling their intent by having these meetings where they're deciding to sell the fixed assets of the company in the form of buildings. And what is going to be interesting to see what is the recoverability on these loans. It appears lessors have taken back some of their planes and the company continues to shrink. And I believe sooner or later it will shut down.
You'd also raised concerns regarding corporate governance and accounting practices of Arcom, Neeraj. What is your view on the telecom company? Will it meet a similar fate as KFA?
Well, I don't believe Reliance Communications is going to meet the same fate as Kingfisher Airlines. That has never been the intent of our research, and we have never positioned it as such. The questions we have raised regarding Reliance Communications have to do with aggressive accounting, misrepresentation of financials, and the fact that the company's reported book equity may not be as trustworthy as some people would like to believe it to be, and that perhaps there is a lot of conjecture surrounding the businesses of the organization. Market has been focused on the asset divestiture strategy at Reliance Communications, and our research suggests that the valuation being accorded to assets that are most likely to be sold, i.e. its Reliance Infratel tower business, and we do not include the optical fiber cable assets into those businesses, and the IPO being considered for the subsea cable asset in Singapore. Both these assets, we believe, are unlikely to get the valuation that the market thinks they will. Our valuation of the tower assets is somewhere between 12,500 to 15,000 crores, and our valuation of the subsea cable assets is approximately, in a best case scenario, $800 million US. In both those instances, I think the market will eventually find out that Reliance Communications deleveraging strategy is not going to come through as expected. And therefore, the stock is overvalued, although I do not believe it is going to meet the same fate as that of Kingfisher Airlines.
Neeraj, DLF, now you believe that the best case valuation for the company is about 100 rupees per share. That is what you mentioned on in your last report, for DLF. But now that the company has started monetizing some of their non-core assets, do you think DLF deserves what could be called as a short-term re-rating?
Well, my view on DLF is unlikely to change in the short term given the significant corporate governance issues that we have already raised at the company, and the fact that the company is in deep financial distress in terms of the debt that it has on its balance sheet and the cash flow obligations of approximately 3,500 crores in order to meet both its interest obligations and the preferred and common dividend obligations that it has on its books. The fact that we believe the company has no credible plan to deliver its balance sheet. If you look at the results reported by the company on May 30th, 2012, in spite of selling approximately 1,750 crores worth of other assets, the company's net debt declined by approximately 33 crores over a 3-quarter period that they highlight in the presentation, which suggests that all these asset sales were not able to help the organization deliver. Currently, the market is anticipating sale of either the NTC Mills land and additional other assets, including the wind power assets. We will see when those sales take place. And our valuation anyway incorporates all the evaluation of these assets that the company can get in order to arrive at the number of approximately 100 rupees or thereabouts per share. Our adjusted book value for the company is in a range of 100 to 110 rupees per share. And I think that's fair value for the company at 100 to 110 rupees per share.
So do you believe that with the Prime Minister taking over the Finance Ministry, investors globally are expecting some action on the reforms and policy front?
I think investors globally are unsure of who is in charge in India, And I think investors are unsure as to who will make these decisions that are going to propel the country forward and or launch the next phase of reforms. The fact that the Prime Minister has taken charge of the Finance Ministry is neither here nor there, because every time a decision is made in India, it's either in West Bengal or in Gujarat or some other state where a powerful chief minister actually stands up and talks about it or against it. And then in terms of a coalition government and their other partners, where everybody is trying to make all stakeholders happy, nothing ever gets done. So I think this policy paralysis which continues to take place in India is detrimental to India's perception as an investment destination, and it's even more detrimental for the people of India who actually have to live there and make a living on a daily basis.
Nij, what about corporate governance standards? Do you think there is a general disenchantment among global investors when it comes to Indian companies and their grade of corporate governance?
Well, good governance does not ensure a good investment, but bad governance definitely ensures a bad investment. And to the extent we have highlighted that happened during, for instance, the split of Reliance Communications or Reliance Industries, the fact that UB Holdings and other UB Group entities have guaranteed the debt of Kingfisher Airlines, all of these are detrimental to the share owners of those entities. And bad governance in that sense has therefore led to a decline in not only the profitability of those organizations, but also the erosion of wealth and in some instances theft of shareholder capital. And so bad governance is definitely detrimental to a company's returns. And investors should be cognizant of that.
Neeraj, corporate governance issues and policy paralysis have resulted in the market correcting significantly. Do you believe stocks have corrected to such an extent that current valuations make case for a strong market rally from the current levels?
A market rally is going to be based on fundamentals. And stocks that have been governed poorly are not going to participate in the rally to the extent that stocks that are well governed. And stocks whose valuations on a fundamental basis is corrected more than it is warranted will actually outperform the stocks that have not. And therefore, a market rally comes on account of growth in the GDP and growth in corporate earnings. And there are stocks which may have been discounted in the market on account of bad governance. And when the investing community realizes that these stocks are bad governing stocks have a new management in place, then those valuations will come back. But otherwise, valuations in general are a function of GDP growth and earnings growth, and they do discount governance. So right now, will the Indian market rally? If the Indian market has to rally, it will rally because either the policy environment is improving or the Indian GDP growth is picking up or inflation in India is declining and therefore domestic consumption is going to pick up. And it will rally on account of those aspects, not necessarily on account of governance issues that may be hobbling a few stocks right now.
Neeraj, so apart from Kingfisher Airlines, DLF and now Arcom, are there any other companies where you are worried about governance standards?
There are many other stocks on which have governance issues in India, and we will write on them in due course.
And keeping with the market expectations, ECB has gone ahead and cut rates by 25 basis points, Neeraj. Will this rate cut provide the much needed lease of life to the Eurozone, or do you think this move is not going to do enough?
Well, if only I knew the answer to that question. But yes, Eurozone is in difficulty and ECB is trying to do its best, and so are all the governments in terms of the European Financial Stability Fund. It remains to be seen if it revives the economy, because unemployment is running at 25% or more in some of the southern European countries, and they also have a big pension problem and social security problem there. So these are all structural issues which will take time to play out. To the extent the market was anticipating a breakdown in the euro and therefore a draconian outcome and a depression-like scenario, clearly in the last week or so, for the short time or the time being, that has been lifted. But a small rate cut from the European Central Bank or the Chinese Central Bank is not going to really put the global economy on a growth path.
Rich, that's a fair point, but the fact that in last 24 hours and last 48 hours, all central banks, they have announced a rate cut. Do you think such a coordinated rate cut, movement by central banks will help revive global growth?
Well, monetary policy easing is being done in the Western world in order to revive some demand, because there is high unemployment and there is low inflation. But the issue is the entire globe has been dependent on some of the BRIC countries for growth. With high inflation in India and a high fiscal deficit and high current deficit, Indian economy needs to actually slow down and slowly then come back on a recovery path as we get inflation in India under control. China has had a similar property bubble and they do need to control it, otherwise there will be social unrest. So it is unclear at this time if all this easing is going to lead to a revival in global growth. But clearly all the banks, the monetary policy committees of all the central banks in the world, the IMF, the European Central Bank, they are trying their best, and we can only hope that this does recover. But one cannot forget that the entire globe is in a deleveraging mode. The current financial crisis was built on a diet of cheap credit. To the extent we are continuing to